If you're paying tax, it's a good thing.
Tax means you made money.
Exactly. It hurts me. Believe me, it hurts. Their net position, they're not accounting for tax, so they feel like they're losing wealth, but it's wealth they never had.
For a lot of investors that are a bit more experienced, they usually do face some sort of roadblock.
Customers for us don't pay us to do the easy thing, they pay us to do the right thing. It's actually easy for brokers to do the other thing. We're not taking the easy route.
The experienced investors have been doing this for so long, they just think that it's the natural next step. They don't even question why they're doing it.
I know for a fact that this client spoke to many brokers, many buyers agencies, and the reason that they went with our team is because we're the only ones that...
Welcome to the Property Nerds podcast, and in this particular episode, no guests in today. You're stuck with the three nerds. Myself, Arjun from InvestorKit, Adrian, our lead strategist at InvestorKit, and then the man of the hour, Jack Fouracre from Fouracre Financial. We're jumping in on another finance specialized episode because property is a game of finance. In today's episode, we're jumping into the world of experienced investors. Many people think finance strategy is to do with the new investors just getting started, so they get started right. And they forget that there's experienced investors who go along the journey thinking they know everything, thinking they've got everything sorted, or thinking the opinion they first got was the right thing to do. And today we're going to bust those thoughts because that is not the case. When you hear the strategies, when you hear where clients were and then where they are today, you're going to be blown in terms of the results and the impact being made. Stay tuned right to the end of this episode though, because we actually go through 3 key scenarios and you won't want to miss the third one, which goes deep into something that looks so simple, but suddenly it's turned into an extra 2 properties where their current bank said no more. So this is going to be one to go into. Let's jump into it.
Nerd alert! Property Nerds, the home for data-driven property investors, where we uncover Australia's hot and cold markets, latest headlines and trends.
Jack, here on the Property Nerds show, mate. Let's start off with the first scenario. Who have you got in terms of like the client scenario here?
Yeah. So this is a client that we had a conversation a couple of weeks ago. They came to us with 2 residential properties worth about $650, $700 a piece, and a commercial property worth about 1.15, 1.2 around there.
So gone to commercial pretty early.
Yeah. They did, and they actually purchased it in their personal name as well.
Okay.
So they came to us and they wanted to know their options.
Yeah.
Now, what they could have done, or they spoke to another broker and they said basically they could get another 700 or 800 and they were going to do it in their personal name again. So basically the way that we were able to, they were pretty tapped out and to get a 700K or 800K commercial asset in their personal name, it would have had to be with a third tier lender. They were really towards their max. So,
very rare as well for the right assets to sit at that price point too, right? We like to typically operate at that over 2 million for most deals. Sometimes a couple just under 2 hit the spot.
Yeah.
But you know what I mean? It's rare.
Yeah. So basically if they were to go down that path, they would have just been digging themselves into a deeper hole of what they've already put themselves in. So, typically when you've got a property that you own in your personal name and you want to put it into a trust, a lot of the time, you might as well just sell it because it's, you're going to pay stamp duty and capital gains on the transfer of the ownership. There is one thing you can do specifically with utilizing your like an SMSF, purchasing a commercial property off yourself.
Wouldn't you still have to pay the fees there?
Yeah, you still have to pay stamp duty and capital gains tax, but if you like the asset, like if it's a dud asset, obviously you consider getting rid of it, but they actually like this asset.
Right.
So they had the option of selling it, but they like it. So, you can put it into a trust and pay the stamp duty and capital gains tax, or you could put it into your super because then,
you free up a lot more.
Well, not only do you free up borrowing power because it goes from your personal name into a trust, but you're also selling it to your super fund. So the super fund has a deposit, they get the loan, they pay market price, and as a result of that sale, they're going to generate $400,000-$500,000 plus free up $700,000 or $800,000 worth of debt.
Yeah.
Now the key thing of why that's important, right now they're looking at maybe a 700 or 800K commercial asset, right? Whereas if they free up the debt and generate 500K. Well, their borrowing power is back up, and now they could get up to closer to that 2 mil mark for a purchase.
That's massive.
So,
Yeah.
but the key thing is to do it first, because once you do that, then they've still got the 2 residential properties there that have equity in it, but now they have access to the borrowing power, whereas before they didn't.
So you got the 2 residential properties, and was one of those 2 the ones they sold? Or was it another third one that they sold?
No, they didn't sell anything. They just came to us with 2 residential properties and a commercial property.
Got it. And
Yeah.
it was one of those residential properties that were moving into the super or the commercial
No,
itself?
so you actually can't move residential property into your super.
Got it.
Because it's harder to value, it's harder to get a fair market price. But with commercial, it's actually really easy to value commercial property.
Got it. So in this case, they're moving their commercial to this super. They've
Yep.
obviously got their own advice and reviewed that too. But now what's happened is that their commercial sits in a lower tax environment.
Yeah.
Their commercial borrowing capacity is freed up because it's not in their personal name, it's in their own fund, which is a separate borrowing capacity. And then number 3 is they've unlocked cash, which by the way, in commercial, it's not a very easy to unlock
No.
cash because people don't take equity loans commonly in commercial, right?
Yeah.
They usually have to sell it or hold it. And in this case, they unlock the whole cash.
Yeah.
And then number 4 is that they now have not only the cash to make a subsequent and larger investment, but you're saying that they can reinvest into another commercial. So they've suddenly gone to 2 commercials,
Yeah.
and that second commercial is much larger. And number 5, the
Yeah.
second commercial can be in a trust, which means it's again positive cash flow,
Yeah.
excluded from liabilities, and their
Yeah.
borrowing capacity is again good to go.
Yeah. And if you look at where they
Boom,
started,
power of strategy.
Yeah,
Do you know what I
well,
mean? Like power of strategy
it's
right there.
huge. It's like if you look at where they started versus where they're going to be, I mean, they were staring down the barrel of, let's use round numbers. They had about 2.6 worth of property, and they were looking to make that 3 mil, right? As a result of doing this, they're still going to have 2.6 worth of property. But now they're going to add a $2 million asset to that, plus potentially another residential asset with the change in a separate trust. So just by restructuring that commercial asset into the super and then redeploying, like having the access to funds to now access equity in the residential property, generate a large deposit for a big commercial asset in a trust, they're still going to have change left over, and they can set up a separate trust to purchase another residential property in there. So, and it's just a massive difference from where they were. Yeah, if you dealt with someone who's transactional versus someone that actually says, well, here's what you can actually do.
It's pretty important, I think, for a lot of investors that are a bit more experienced. They usually do face some sort of roadblock.
Yeah.
And it sounds like the previous broker was just looking at that next step of, hey, what can we do now? And then just call it a day, rather than reviewing and seeing, look, if we do have to take a step back, how can we take the best step back forward so that we can take multiple steps forward and really grow and push the portfolio further than, what you said, the $3 million portfolio, but going to probably 4, 5, 6 as you make multiple purchases there.
We've executed this type of plan a fair bit.
Yeah.
And it's really good when it comes up, because I know it's not, it's hard for many brokers to just think of that scenario and actually make it happen and know how to do it. But it's really good to work with clients that can see the value and can look at that as a proposal and go, wow, like that's a really good outcome.
You know what's even better than just saying it's hard? It's actually easy for brokers to do the other thing. And so, like, across the world, I think business owners and professionals need to realize customers don't pay you, on brokers' case, the banks pay, but customers for us don't pay us to do the easy thing, they pay us to do the right thing.
Yeah.
And this is where the right thing is what will really help your customer's portfolio grow. And in this case, if I've done my math right, they've gone from 1 commercial to 2. They've gone from a better tax environment for a commercial. They've gone to a better tax environment for the commercial. And they've now extended their borrowing capacity from 2 residentials to a third, plus another commercial.
Yeah.
It's
And in the
a
right
game
structure, it's
changer.
actually built for scale. Like, because they've redirected money into trusts, technically, individually, they've still only got those 2 residential properties. So their ability to use that to build on top of, mate, it's, big.
And when you do these strategies, it takes time because paperwork, advisors.
These days, I could do it in the first conversation.
No, you can do the strategy in the first conversation, but other brokers who aren't you are looking at it and going, oh, you need to speak to your accountant now. And then after that, you need to go to a lawyer to run those transfer papers. Then you need to look at advice on this. Then you need to look at advice on that. And then you need to come back to me. And then you need to go back to your accountant to set up a trust for another one. Then you need to come back to me for a pre-approval. Then you need to search for a commercial property. I could get paid now after the next purchase for a resi quickly just by getting that one property purchase. Or I could take many, many months for me to have any benefit from this. And who knows? Customer might just put in too hard basket and go away and not even do it.
And that happens, mate.
That's ethics for finance 100%. Right there. That's so happens. Powerful.
And that you always run that risk of saying like, yeah, I could do that for you right now. But if you just take a step back and be a bit more strategic about it, the process might take a little bit longer, but by the end of it, you're going to be so much better off. And a lot of brokers I think they're afraid of that because the client might go elsewhere or, we got to just give the best advice we can and, hope for the best.
Yeah. And look, alongside that, obviously clients are getting their own formal advice from the accountant and financial planners on any trusts and SMSF movements and things like that. So, that helps when you're building a team around you to do that. So that's customer one, turning from 2 residentials and a commercial to just about to cap off with one last purchase to suddenly a scalable solution and 3 new purchases. One being the transfer of purchase and 2 new ones, plus many more on top. Before we go into customer 2, for those who are listening, but like maybe not watching, we just had the funniest little moment come up, which I don't know if these boys noticed. Jack put one leg up on the other leg across, and then I unconsciously just did it too. And then I realized that I did it, and then I just put that leg back down. I was like, why am I doing this? Like why am I just doing the same things? Now that's the collaboration finance and property needs, right? If I'm trying to be corny on that. But Jack, let's go into customer 2. And this is something you see often, Adrian. I'll let you go through what you see often here, which is the whole residential hesitancy to transition to commercial. What do you see that comes up, and why do you see that come up, Adrian, from your side?
Yeah, I think for a lot of experienced investors, residential's all they know. And they continue building out the portfolio. And a lot of the time, sometimes you get, I see this where the experienced investors have been doing this for so long, they just think that it's the natural next step. They don't even question why they're doing it. It's just like, oh yeah, it's time to purchase another residential property. And what we've seen for this client and many other clients is really just questioning what their ultimate goal is, why they're building this portfolio. For a lot of clients, it is to have that passive income so that, they can retire, they can maybe go part-time, they can, have that passive income to spend with the kids or just not work so hard or not worry about money because they've got this additional passive income stream coming in. And it really is, challenging for some of these clients to mentally shift from, hey, I'm not building this portfolio for growth. I'm here to build a passive income to meet these lifestyle goals that they have. So that's what we had for this client. And it was an interesting one because it basically just took us a whole hour just to unpack it with him and to change his mindset of, actually, this is not what your portfolio needs. Your portfolio needs to shift to passive income. And, you're getting, in the most, maybe a little bit brutal, but you're getting to that age where you need that passive income and this is right for you.
Yeah. And this is another scenario as well that we're about to go through where we're not taking the easy route. The easy route could have been you complete an agreement with us, you're on board for a residential purchase, we go and get that done and we move on and we'll come back again when you're ready. But we had to go through restructure, sales, finance review, new capacity review, entities set up and review, and then get going. Months, time, complexity, time on the session, time afterwards on the delay, time with other professionals, time explaining strategy to other professionals, and then also working on something where we could have maybe done many more residential purchases. Again, it's more transactions for us, more money for us, right? But it's like different assets, different structure, different things like that. And so I just want to highlight that as well. Like, I'm super proud of that. I'm both personally, but of the team. Like, just of the team, I'm so proud that like the values across the whole team, our teams together, just being able to go, we're going to take the right approach.
Enjoying the show? At Fouracre Financial, we believe property is a game of finance, and we're here to help you win it. Whether you're still building a portfolio or looking to formulate your exit strategy, our tailored mortgage strategies are designed to simplify your journey and supercharge your confidence. Are you ready to take the next step? Visit fouracrefinancial.com.au and book a free strategy session with us today. Let's make property investing less stressful and a whole lot more rewarding.
Jack, coming to you, mate. When it comes to the finance now, why did this work? How does it make a difference to this customer?
Yeah, so this was a typical client that we always get, where they have such a large residential portfolio and they just can't come to terms with selling assets to enter into commercial. I think because when they're looking at their net position, they're not accounting for tax. So they feel like they're losing wealth, but it's wealth they never had. Yeah. Like if you look at what your assets are worth and what the debt is worth, and they look at that and go, "Oh, I'm worth this much." I was like, well, you haven't taken out tax.
Paper.
Exactly.
On paper.
You haven't taken out tax. So I think when they go through that exercise of selling and they look at the tax, it's like really confronting.
Yeah.
But yeah, and everything was in their personal name. And you ask them, when are you looking to retire? So I want to retire tomorrow. I literally do. Like a lot of people say that as a joke, but this client actually could do it.
Yeah.
He actually could do it. So I'm like, so what's holding you back? Because it's actually staring you right in the face. Like a net position after tax, commercial assets, minimal debt, the cash flow is your goal cash flow. And then, because of the high cash flow nature of these assets and the fact that you'll have such a good equity position now, you can go back and invest in more residential properties, just for further growth and for fun. But right now you're kind of looking at, suboptimal lender options and roadblocks all the way. Whereas if you wanted to retire genuinely, you could do it. You could put this plan in action and you can do it. And I know for a fact that this client spoke to many brokers, many buyers agencies. And the reason that they went with our team is because we're the only ones that didn't look at it from a transactional point of view. We took a step back, said, what do you actually want? And this is the strategy that's going to get you there. It wasn't the easiest road. And we had to challenge a lot of his ideas. So yeah, the fact that he came back and saw the value and he's actually executing on it is, he's very grateful, and it was a good one.
Well, it turned into an over $5 million commercial purchase, one that he didn't think that he would be getting to that type of purchase price ever before.
Yeah.
But he was able to get to that purchase with over $5 million in commercial, that too, a multi-year lease, major, company that's like a national plumbing company. And so from that perspective, when you get that type of industrial showroom, over $5 million in assets, and you asset price, and you get that quality of lease, everything like that, it changes the game not only on income and retirement goals, but also stability. Because with commercial property, he's actually seen the opposite. Him and his wife have looked at the portfolio and realized that let's get into commercial in the past. So it was also hard for them to come to it because they saw the bad side of commercial. They went into a commercial property with someone else, and a buyer's agent bought them something and it was vacant for almost 2 years.
It was a lower price point, and they compromised on the purchase price because they wanted to retain their residential assets.
That's right.
That's
so
the key.
They were literally almost going to either make the same mistake twice, or go to residential and not feel like it's the commercial mistake, but it's a strategic mistake.
Yeah.
And so this is an example of wealth building at the front end, younger age in life, is really powerful through residential, is really powerful through debt acquisition, paper wealth. But at some stage, if your goal is to live on it, it needs to turn into an income. And it doesn't turn into income from paper, it turns into income from real cash flow.
Yeah. I think for a lot of those clients that get to that end goal and struggle to have that mindset shift into another strategy, it's because they weren't primed for it initially.
It was never in that thinking process.
No, it was never an option. It was like for them to think about paying hundreds of thousands of dollars of tax on the way out.
Yeah.
For them to just come to that and accept it, it's a lot if they weren't primed for it in the beginning.
Tax means you made money.
Exactly.
Do you know what I mean? Tax means you made money.
If you're paying tax, it's a good thing.
Yeah,
it hurts
made
me.
Money.
Believe me, it hurts. But as long as it's going to a good cause.
100%.
I think it's also a good reminder for a lot of people that, like you said, it's that mindset shift of making sure people understand, hey, this is what you always wanted to do, or where we were always going from the very start. And even though it's probably also the whole mantra of, never sell, that also comes to feed into the mentality of a lot of people.
I've only ever seen podcasters over 60 say that.
But it's true, right? Everyone says never sell, and that gets into your head. Whereas the reality is once you've built up that equity, you've built up that portfolio, you do need to sell so that you can, in some sense, graduate to commercial assets and get to that goal.
That's a really important point as well, Adrian, on the never sell part. Like, I've seen some sad stories on that. Like, I've seen, in my banking days, I was a branch manager in Marrickville. Marrickville has a, big Italian, Greek community as well. People who've been, multiple generations, Aussies, their kids here, their kids here, like grandkids, even some with like great grandkids. It's like proper, pensioners and inner West own that home for many, many years, debt free.
Yeah.
Now, firstly, that whole never sell part has meant that some of these couples have properties worth 2, 3, 4+ million in the inner West of Sydney, zero mortgage. But because it was just that one asset they could get to debt free and they kept paying their mortgage down, thinking they're being great Aussies, pay off your home, just, sit tight. They have nothing to show for themselves. They don't have solid supers. They don't have anything that's like investments wise. They got into a high risk environment. And so they don't understand many times that, there's an emotional connection to the home, but like that's a $3-4 million downsize waiting to happen. And look, I'm never one to say I should force you to downsize with policy. That's a shame. Like, never tell someone what to do with their money when they've, built it, worked hard, paid it off. But I mean, there is strategy. You can live somewhere, still have a place, unlock this capital, and have a life that you can look after yourselves. I see many of these elders like coming in, door knocking, and the emotional part for me was like, we have pension Thursdays. I think it was pension Thursdays. For any of my CBA folk who remember, remind me in the comments. But pension Thursdays was, I think, like once a fortnight. And Marrickville Road was one of those branches where some people joke about this. I'm not joking about this. Some people say it was like apocalypse of zombies outside the glass doors. There's like 100+ people just knocking on the glass door with the canes and everything, just like going, hey, open up, open up. It's like 1 minute past when the doors were meant to open. We'd have good laugh with them. And I had a few lovely ladies I can remember, like they're walking in with their walkers and they try and beat the other lady with the walker. And I'd be like, auntie, come, let's race. And then she's like, walking over. But it made me think of just many of those scenarios and stories where people are sitting on that because of that never sell. They don't have to. It's their choice. They should decide what they want to do. But if they knew the strategy that would just unlock tax-free wealth, in that case, tax-free, not like the tax scenario, but tax-free, they wouldn't be having pensions and things like that and relying on this little passbook stamp and every fortnight on a Thursday for a couple $100 and, get some of that tax back where, they worked so hard for. But I know that's another note, but just wanted to say, like, for anyone listening to this, is maybe this isn't a finance scenario for them. They don't need to really get any finance for that, but it's like just important to teach your family strategy, because even them, like the generation from before, my dad was under that opinion too, and similar things impact him on that part. So I just think like selling can be a big part of success in property, but it's about when to do it, when to transition, when to make it right time. But scenario number 3, this is a good friend of mine. And this particular scenario is a client where they're high income professionals, financial professionals, banking executives. See, they got it all figured out, surely, right? Bankers know everything, but they're humble. They wanted professional support. They wanted guidance. Banker walks into banker typically because the one company, staff benefits, you think like, hey, that's where I go.
Yeah.
And what do they say? You're stuck.
Yeah.
Borrowing capacity's done. And they built a really healthy portfolio. Queensland, New South Wales, South Australia, Victoria. They've got a lot of assets, like 3, 4, 5 properties. I think like 5th property now. So a lot of assets there. They're stuck. Good earning professionals, rent investors, and they want to add another couple properties.
Yeah.
And so could talk to us about this scenario.
Yeah, so this is a classic example of when you kind of need to level up and move away from your banker just at the one bank. I think why they got to that position, like because usually when you see high income earners, typically they want to continue to grow, and the trust strategy really does allow them to continue pushing forward. So because they lacked that strategy in their first few purchases, they kind of buried themselves into that hole of, I'm stuck. So naturally, that's typically when they seek out a broker. And, obviously because we have access to a lot more lenders than just the one, we're able to get them much more lending and pivot into that trust structure and give them a bit more of a strategy on how to move forward beyond that. So not only did we do that, we also looked at SMSF as an option, which quite often is not available when you deal directly with the bank.
And that's something not many people know. They think, oh, my bank doesn't do SMSF lending. I don't have enough.
Yeah.
I don't have enough in my super. But hold on, you're not needing to buy the whole property cash. There are banks out there that do self-managed super fund lending, and it's just not happening in your big four. So it's a thing that many people aren't aware of. So I'm glad you bring that up.
So Jack, when this client came to you, they had only been talking to the bank. And I know that, you're probably a little bit biased when it comes to the whole bank versus broker conversation, but something I...
not at all. Come on, mate.
Something I just really thought of was that banks have their single product, brokers have a variety of products. And that's usually a good argument of, firstly, why to consider a broker in the first place. But the second part is just around trust strategies and everything like that. Now that I'm thinking about it, banks would never really talk too much about the different, trust strategies that we can use, hey?
Well, they don't talk about a lot of things. They lack strategy, and they actually, on purpose, will give you a P&I loan because it gives you more borrowing power with them. Whereas interest only providing the better cash flow in the short term, it does affect your borrowing power with those first tier lenders.
Yeah.
So they kind of pick and choose what they tell you, and they kind of guide you down the path that's best for them, not so much for you. And it lacks strategy. So sooner or later, because they were tapped out, we can get them a bit further to a certain extent. But what they may need to consider is to sell off an asset in their personal name to then, further invest into that first trust.
Yeah.
So it's kind of like undoing the mistake, or just kind of reorganizing the assets to allow you to push forward. But we find that very common, that dealing directly with a bank, you definitely lack the strategy, and you kind of find yourself with all your properties cross securitized, everything, all your investment debts P&I, and it's unfortunate, but yeah.
Yeah, it's a good way to put it, actually. It's just the banks will consider, how can we get you to the furthest spot just with us?
Yeah, that's right.
Yeah, it's also simplest and easiest because they don't have small targets. Their targets are massive. Like, some targets are pretty solid. And now the good news is they've got good remuneration structures too in some roles. They'll look after you well if you hit the targets, but they also focus on efficiency.
Yeah.
Because when you hit certain volume and targets, you need efficiency. And so when their efficiencies needed to be so high, you see those simplifications. Quickly, I got this really done easily for you. E-sign, ready to go, in your inbox, 1 hour approval.
Yeah.
Now, so much of your weight off your shoulders happens now. You're like, wow, that was easy. Wow, they were good. They were good. That was the best. That was fast. That was simple. And then because of all this good, just sign the dotted line and just accept it. Just 3 buttons and clicks.
Yeah.
And you've gone and cross-collateralized your loans. You've gone in on P&I on all of them. You haven't got the best interest rate either. You haven't looked at trust versus personal. You haven't looked at other banks in terms of policies, LMI waivers. You know what I mean? The whole thing happens there. But in this particular scenario, Jack, if we wind back to this customer, they've gone from their 4 properties to a 5th and the 6th, SMSF being one of them, a trust being another one. If I'm not mistaken, but you tell me actually, sorry, these 2 properties, has that actually impacted their borrowing capacity at all?
Yes and no. It's complicated to answer that, but it's something that they did when they were told they couldn't. And we've actually given them a way to expand on that. So by selling one property that's owned in their personal name, they could basically replace that with 2 as a result of it, just by the way that we've structured the other 2 purchases. So yeah.
But also now they've got an SMSF property which is separate in capacity. They've got a trust which, as time grows on, will get to positive at some stage.
Yeah.
And when that time comes when it is positive, they've now excluded another asset. So they've still got the same situation as where they are.
Yeah.
but they've gotten 2 extra assets, which by the way is already a big win.
Yeah.
An extra $1 million plus in compounding wealth.
Yeah.
And then on top of that, they've set themselves up with further scalability. And that's what it's all about. So like this particular investor episode is for experienced investors. It's just letting you know, look, it's also for first time and early investors knowing the importance of strategy.
Yeah.
But specifically for experienced, I want to talk to experienced investors who own property. There is a whole new level of like unlocking capability. There is a whole new level of unlocking like outcome for you. And when you chart out from a strategy end, the extra property, Adrian, the extra 2 properties, like 2 properties in someone's journey versus 4 is the difference between half your passive income of 100K being hit versus all of it, right? Like we had Ryan and Lauren here from Darwin, clients of ours. They've purchased 5 properties by 30. And those 5 properties by 30, they mapped out that if they only had 3, they would not hit 100K passive by the time they needed it. They would hit about 60 to 75. So it just shows you what an extra 2 can do. Game changer. Yeah. So that's it from this episode. If you'd love to, have finance strategies like this on your side to grow a portfolio, reach out to the team at Fouracre Financial. Jack's got a team of legends there helping people apply strategies like this. Those 3 customers are customers that have used Fouracre Financial to get ahead. They're the clients of Fouracre Financial and the team there that have been able to get that extra leverage of growth and extra strategy to not have them stuck in their journey, but reach and go beyond the goals that they originally had. And that's what it's all about when it comes to finance, because property is a game of finance. So reach out to the team at Fouracre. So that's acreage acre, and it's 4, the number 4, FOURACRE financial.com.au. So it's fouracrefinancial.com.au. Thank you so much for tuning into this podcast. To hear more like this and to help us spread the word, don't forget to leave us a rating and follow along for our next episode.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Game over.